We are live, so we can start.
Yeah. Good evening to all the members who have joined for this virtual meeting on Big Data and IFRS. So I welcome the speaker of the session, CA Yagnesh Desai, who will be addressing on the topic of IFRS. Friends, I would also inform you that CA Yagnesh Desai, having lost his mother about a few weeks back, is still able to join the meeting and address the members on the topic of IFRS.
Yeah, to be precise, sir, I lost my mother on 31st of August.
Oh, 21st of August. Very sorry to hear,
31st,
sir. But,
31st August, just about last.
31st. Oh my God. Hardly 5 days before.
35 days, yeah.
So it's very nice of you that you have stood by your commitment and wanting to address members despite a big tragedy in your family. Thank you very much for joining and wanting to address members and on the topic of IFRS. My heartfelt condolences to you on the demise of your mother, sir.
Thank you, sir.
Yeah. So to start with, I would like to introduce CA Yagnesh Desai ji. He's a chartered accountant and also a CPA from USA. He's pretty senior to me also. He's been in practice since 1983 and wide knowledge on audit of corporates and taxation matters. He's actively associated with the activities of Institute, training members on IFRS in certificate course of Ind AS conducted by the Institute. He's a trainer for diploma in IFRS exam conducted by the ACCA of UK. He has composed and delivered e-lectures for accounting standards for the Institute of Chartered Accountants of India, and has been a speaker on accounting and auditing standards at various seminars organized by the Institute. He's delivered motivational speeches at various national conventions for students at national conventions and conferences. Having trained many CPAs of Philippines on IFRS, between April 2009 and till date, he's delivered more than 1,117 seminars and sessions in about 40 cities in India and abroad. This will be his 1,118th session. So hearty congratulations, sir, for actually listing out the sessions you have addressed and the number of topics you would have addressed on various situations and addressed so many members and students. He's been recently awarded Icon 2021 of Mumbai City by Times Group. His hobby of comparing music shows, taken part on half marathon also, and has completed sustainable report course and passed the exam as well. This is an extremely brief profile of CA Yagnesh Desai, coming and wanting to share his rich knowledge across the southern India, despite a very stressful situation and a tragedy at his home. Thank you very much, sir. Very nice of you, and thanks for your commitment and dedication to the profession. Thanks a lot.
Namaskar,
I now request Yagnesh Desai ji to address the members.
Yes. Namaskar, Naresh ji. Thank you at the outset for inviting me and sharing my knowledge with my professional brothers. And it's always my passion, sir, okay, to share my knowledge with the members on this. And I like this session to be little interactive. And Naresh ji, whoever wants to interfere in between and ask some question to me, they are always open to it. Okay, sir. So I'll share my whatever small list at the small presentation. Okay. So the topic which was given to me is about the recent developments on the index. So really speaking, there are not many of the amendments in the index, but I must share something with you. There are two changes which were introduced and which are effective from April 1, which are effective for the accounting period beginning on or after April 1, 2022. And these are the very small changes, but I want to tell you something, Naresh ji. In fact, you have given me a good platform to discuss with my fellow professional brothers about the commit of the Ind AS oblique IFRS, and that is that this standard is evolving standard. This standard is a evolving standard, and I would say the most evolutionary standards we've taken, we've come across. When it comes to the old standards, AS, something like that, which, sir, can I ask you a question? Nareshji, when did you pass your, in which year did you pass your CA? Because I need to know from the perspective of the definition of assets. So, in which year?
So as I mentioned, sir, you are much senior to me. I qualified in 92.
92. Okay, fine. So then I must tell you
May
that
92.
the I clarified in 83, and the definition which was there for the assets, like asset is a resource controlled by an entity from which future economic benefit will flow into the entity. Now, this definition was there since at least 1977 when the accounting standards were introduced, and 23 and about 20, so about for 43 years the definition was same of the assets, liability, equity, income and expenses. These are the elements of financial statements. The point which I want to drive you home is that for 43 years definition of asset was same. All these elements definition of same. But now recently, for accounting period beginning on or after April 1st, 2022, sir, the definition has been changed of these five elements. And now they are talking about asset is a resource control, not but asset is an economic resource controlled by an entity. So they're tweaking the definitions. They've tweaked the definition of the liability also. As regards the changes are concerned, one of the big time changes which we can think in last couple of years means from a accounting year beginning on 2018 and 19, means 18, 19 and 19, 20. Sir, we've seen the big time changes in the, am I audible, sir? Sir, am I audible to you, sir?
Yes,
Naresh
yes,
ji?
sir.
Yeah,
Yes,
yeah.
sir. Yes, sir.
Okay, okay. Thank you so much. So the big time changes which you witnessed is are as under one in the definition of these assets and liabilities, but this has come as a result of a big time change in the framework, a conceptual framework for the financial reporting. They have changed this definition of these elements. So my first advice to my fellow chartered accountant friends is to read these statements. But I must tell you, Nareshji, one thing, that hardly the practicing chartered accountants read this document. And the name of this document, the title of this document is the Conceptual Framework for the Financial Reporting. Friends, this literature is so important that even the standard setters, maybe at the accounting standard board level of ICAI or at the international forum, International Accounting Standard Board, they are referring to this edifice document. This is the foundation of any accounting standard. So that's the first big time change in the definition of the elements of the financial statements, namely the assets, liability, equity. Now, why this changes? Why the economic resources and all these changes? Those changes have been brought into effect from the perspective of the changes in the lease standards. The standards concerning the leases. Um, the title of this standard is IFRS at ISCB level, IFRS 16, and at India level it is Ind AS 116. The leases. This is the big time changes, but many of us are now conversant with this standard. But those we have not come across the standards. I must share something with you that this standard has been changed topsy-turvy from the perspective of the lessee only. Yes. Now, from the perspective of the lessee, there are hardly only one type. There is only one type of lease, and that's called so-called finance lease. What we've seen earlier in our the old regime of which was concerning the IS 16, IS 17 oblique in AS 17. In AS 17, there were two types of leases. One is the one from the perspective of the lessor, second from the perspective of the lessee. And in both the cases, the leases were of two types: A, finance lease; B, operating lease. both from the perspective of the lessor as well as lessee. So in all, there were four aspects to a lease: finance lease from the perspective of the lessor, operating lease from the perspective of the lessor, finance lease from the perspective of the lessee, and finance lease from the perspective of the and the operating lease from the perspective of the lessee. So in all, four types of leases were there, but now there are uh, only one type of lease from the perspective of the lessee. From the perspective of lessor, there are no changes at all. Okay, so that one must look at it, because there is something called right of use asset. There is something called right of use asset, and this is giving the right to the lessee under the lease. Now there is no question of operating lease and finance lease. There is only one type of lease, and that is from the perspective of the lessee, and that is the lease. There are two exception and exemption for that in that lease, and that is, one is the short term lease. Now when we talk of the short term lease, it is about the lease period having a period of less than 12 months, and small lease means the lease which has the smaller value of the lease amount, but they have not defined this smaller amount under the Ind AS. However, internationally, in the basis of conclusion, they have given the indication that the lease which has the annual lease amount of say about 5,000 USD is considered as a lower lease, the lease of the smaller value. However, we are not supposed to translate this into the INR, and one should not say that 75,000 is 5,000 USD into say 80, so it should be about 4 lakhs rupees per annum. Not like that. Our standard is precluded from the giving these changes in the precluded from assigning the monetary value to this limit. So this is one big change, and before that there was a change called the about the uh, revenue from contract with customers uh, under IFRS 115. Of course, this was brought in 2018, but they have again brought in many changes. In fact, that standard has replaced the many other standards like IS Indes 18, Indes 11, and SIC interpretation 30, IFRIC interpretation 30, IFRIC interpretation 13 about the customer loyalty program, and so many things. So the idea is, friends, gone are the days when I had become a CA, that at that point in time, after that, I didn't need to read a lot, much about the changes in the accounting standards, because they were same for years to come. But that's not the case now anymore. If you like to hear something great about the IS1 in this one, sir, can I ask one of the participants to come on the audio, if not on video? And I want to ask one simple question to them, sir. Can I ask, sir, Naresh ji? Can I ask one of the participants who is willing to come and answer my very simple question, or just be interactive with me, sir?
Hello.
Yes, please.
Sorry, sir. Your video is turned off. Sorry, I just.
Nini,
This is from SIRC. Were you asking something, sir?
yeah. If any of the participants would like to say something about
Yes, sir. I have given option for them to unmute and speak actually. So those who are interested, they can put it in chat box, or else they can unmute and speak actually.
okay, sir. So attendees, whom should I check? Who should I allow to come, sir? Are Mr. Ajit, Mr. Ashok, Mr. Ashwini, or Miss Ashwini? You would like to say, you would like to interact with me, sir, because I want to share something with you, but make it little interactive, sir. So can I know that who would like to say something? Would you like to raise your hand, please? In the chat box, who would like to say? Now, someone is saying that my audio is breaking.
Sir, audio is not clear, sir.
It seems to be fine at our end, sir, because you need to check that your bandwidth also once. If bandwidth is
Okay.
over at that other end, also the audio might break actually. At our end, it seems to be fine. We are recording the same.
Okay, sir. Thank you, sir. Thank you.
Okay, fine. So, Ajit Nathji, would you like to interact with me on audio, if not video? Sergi? because I want to share something very interesting anecdote with you, and at that point of time, if someone is interactive with me, I'll be more than happy to share something with you, sir. And it's very, very important, sir. Very interesting, rather, I would say. All right, then, if no one is coming, then I think should I go on my own, sir? Hello.
Maybe Seth
Okay, okay, okay.
will wait.
So, all right. Now, it's not just academically interesting to know about the recent development on the index or the recent amendments in the index, or for that matter, the standards adopted by the entity for the first time. And that is just if you allow me a minute. Just if you allow me a minute, I'll go to the Excel sheet. So I have stopped sharing the sheet with you, sir, and I'll come back to you in a minute. I just want to take you to an Excel sheet. Just 1 minute, sir, please. So can you see an Excel sheet on your screen, sir? Hello? Can you see an Excel sheet on your screen?
Yes, sir.
All right. So now, why it is important for all of us to know the changes or the recent development in the field of Indes oblique IFRS. So that is first from the perspective of the first time adopter, and second is from the perspective of the one who have already adopted Indes. I'll put my video off because I'm going to stand up and type because this by sitting it's a bit uncomfortable for me to type. So this is important from the perspective of those who are going to adopt the new standard for the first time. That is known as the first time adopter of the Ind AS. They are known as the first time adopter of the Ind AS. Uh, it has recently happened that Indes 116. Indes 116 was brought into the effect from 1st of April 2019. Now, that was brought into effect from 2019. I would say the financial year beginning on or after 1st of April 2019, they have brought in these changes. They've introduced a new standard called Ind AS 116. Okay, the releases. Now, suppose an entity was adopting Indes for the first time for the financial year 31st March 2018 to 2019. Sorry, sir. Sorry. Someone is adopting the financial statements IFRS for the first time in the financial year 2018-19. Okay, now let us see that how you were affected by this standard. So when you adopt, so you're known as a first time adopter for financial year 31st March 2019. That means financial year you can say 18-19. So you will very innocently say that, sir, my financial year is 18-19. That is the first time adopting. So I'm adopting this standard from 1st of April 2008, 2019, 2018. So 2018-19. This slide of kitchen, please. 2018-19, you adopted for the first time the IFRS of Karnakubuda. Okay, thank you. So you adopted this for the first time, and you will argue with me that, sir, as far as Indes 116 is concerned, that was applicable from 2019. I'm going to give you an additional perspective. You may wonder why am I dragging back to the past, but this I want to give an illustration and then tell you something that how is going to impact you in future. So this new standard was made effective for the accounting period beginning on or after 1st April 2019. That means for financial year 2019-20, this standard was introduced. And you have adopted this for financial 18-19. So for financial 18-19, the comparative was 2017 and 2018. I repeat once again, you have adopted financial for the first time for in days for the first time, for the financial year 18-19. That means for the year ending 31st March 2019. Comparating was 2017-18. Now you may wonder, so this standard was I have adopted IFRS for the first time on 31st March for the financial year 18-19. Okay, and whereas this standard was effective from financial for 1st April 2014 for the financial 19-20, right, sir? So, but you can say that this was actually effective for the financial year 18-19. This was effective for financial 18-19. Sorry, there was one standard code 115. This was effective from financial year 1st April 2018. This will be more relevant example because it was in April. Just a minute, please. You can say that this was applicable from financial year 19, and I have adopted 18-19 this financial year. So I should apply this standard for only this year? No, but you should also apply this standard on 31st March 2017-18 also. So for example, uh, there are some new changes which is taking effect from 1st of April 22. 1st of April 22, and now I give one example. So this is going to be effective from, and your client is adopting a new standard IFRS for the first time. The changes in the property plant equipment is effective from financial year 2022-23, and someone is already, for example, adopting someone for example adopting from financial year 2021 22, right? Okay. uh, okay, sir. Okay, fine. They are also adopting for the same period. Okay, they're also adopting for the same period. So you have to give the comparative for financial year 20. So this is known as a first time adopter. You are adopting for the first time in financial 22-23, and the changes in the PPE requirement is also from 22-23, and you have a comparative of uh, financially 21-22. Now the question arises, these changes are made in financial year 22-23, not before that. You're also adopting IFRS for the first time in 22-23, and you have to give a comparative for 21-22. So whatever changes are effective on, so the first accounting year of IFRS is known as 31st March 2023. 22-23 is a financial year. Accounting standard effective on 31st March 22-23. That means this financial year ending on this date, whatever standards are effective, you have to apply here also. Even if those standards were not effective for the financial year 21-22. Okay, so be careful that what is effective is the effectiveness of the standard on the date on the first financial reporting period. The first financial reporting period is financial year 22-23. So the ending the first financial reporting date is 31st March 23. On this date, whatever standards are effective should be applied for the comparative period, and that comparative period is 21-22. Now you may ask a question, sir, I agree that for financial year 22-23, we have to follow the accounting standards applicable for this financial year, meaning 31st March 23. And yes, I understand that accounting period beginning on or after 31st on or after 1st April 2022, whatever standards are applicable, I have to honor them, I have to follow them while preparing my financial statements for the first time under Ind AS. So when you adopt the Ind AS for the first time, you are known as the first time adopter, FTA. You may then argue with me, sir, why should I then care about these standards which is applicable in 21, 20, in 22, 23 for preparing the comparatives for 21, 22? Because in 21, 22, this standard was not applicable at all. No, I mean, no and yes, both. You are right that for financial year 21, 22, the new standard which is effective from financial year 22, 23 was not applicable. But IFRS, or for that matter, IS, Indian Index requires that you have to always give comparative. You have to give the comparative along with the first time adopted financial statements. My first index financial statements is 22, 23. My comparatives are 21, 22. So when I prepare, so when I restate comparative, or there is something called I prepared the my first balance sheet. This one is opening index balance sheet on something called the date of date of adopting that is a date of that's a date on which first sorry okay can anyone tell me what is the date you call this, sir? The first balance sheet which you are preparing as per the date of this known is called, you are actually applying in days from 1st April 2021. You apply this in days for the first time. So your balance sheet as at 31st March 2021 will be converted into in days on 1st April 2021, and that's known as something called DOT. Now DOT stands for the date of transition. Now let us review once again. You're adopting the index for the first time. So can I interrupt for a minute, sir? Sorry, sir, I have to take a mute for just for a minute. So I repeat once again. Now, the idea of, you may see, idea of giving this is to understand the importance of the newly introduced standard. I'm narrating it for the first time. For once again, you are actually a first time adopter for the financial year 22-23. And for this comparative is the financial year 21-22. But your journey for IFRS oblique index starts on 1st April 21. That's the first day of the comparative period. My financial year is 22-23, the comparative is 21-22, and naturally the 21-22 beginning date is 1st April 21. This day, on this day, I convert the financial statements of 31st March 21 into into the index on 1st April 21, and this is known as DOT, the date of transition to index. Now see, I may be preparing accounts on 1st April 21, but the question arises, which accounting policy should I apply? Which accounting policy should I apply? The question is, whatever the accounting policies are operative and effective on this date. What is this? This is the first Indies reporting date. First Indies reporting date, and that date, my dear friend, is 31st March 23, which that is the date of the this financial year. So whatever is operative on this financial on this date should be applied in preparing opening Indies balance sheet. Now on first day, that's known as the date of transition, you prepare something called opening Ind AS balance sheet. The first balance sheet, there's an opening balance sheet, opening Indies balance sheet, technically speaking. So this has to be prepared on the basis of accounting policies effective in operating on this day. At the same time, when you restate financial year 21-22 as per Indies, it should be accounting based on the accounting policies effective as on 31st March 2022. 31st March, sorry, it should be based on the accounting policies prevailing on the first Indies reporting date, and that is 31st March 2023. So this day, effective accounting policies should be used to restate financial year 21-22 and opening Indies balance sheet on 1st April 21. So uh, some changes are expected in the format of the Indies, and that could be effective from the next financial year. Nowadays, you when you see the cash flow statements, you find the cash flow statements in form of the operating activities, investing activities, and the financing activities. Correct. In a days to come from now, maybe from 1st April 23, you will see that in this you will see the format of the statement of profit and loss as per the cash flow statement. Now this is on the verge of conclusion, because the moment to bring it bring these changes was started in June 2020. So the point is that it is important for us to know that which standards are effective on the first Indies reporting period, because those based on those policy, the comparative and the opening Indies balance sheet will be prepared on the date of transition. Now you may ask a question that why this is important for the company which is already preparing the financial statements. Now I share something with you that for the financial year ending on 31st March 22, on 31st March 2022, the year which is recently ended, the Ministry of Corporate Affairs has announced some changes in in property, plant, equipment, and that is in the 16, and also uh, liabilities, etc., under the Ind AS 37. Now these changes are going to be effective from the accounting period beginning after 1st April 2022, meaning they will be applicable for the financial year 22-23. Yes, I mean it, 22-23. And they are not the changes, they are not there for financial year ending 31st March 22. Early adoption may be permitted or not, but they were the changes, they were announced during financial year 21-22. They were announced during financial year 21-22. Now these changes were announced on financial year 21-22 on 23rd of March 2022. Amended the company's Indian Accounting Standard Amended Rules 22 as follows. Now they have made these changes. I'm coming to that a little later, but I would explain you this. Despite the fact that these changes were made into financial year 21-22, but they were effective for the financial year 22-23. Early adoption was permitted. Entity may or may not have accepted it. Correct? Fine. And you not accepted it. Fine. You not adopted it. But in that case, you should make a disclosure in your notes to accounts. An entity which is already adopted in days should make disclosure of these facts in these notes to account, stating that these changes were brought into the effect from 1st April 24 accounting period beginning on or after 1st April 22. Early adoption was permitted. Entity has not adopted this earlier than the actual application, and the changes are as under. Now, what do you mean by changes that they are under? It's not supposed to quantify that what will be the impact on the financial statements of the company, or what is it going to be material, immaterial, nothing. They have to simply make a statement that entity is considering these changes, and that's all. Now, the changes is that the excess of net sale proceeds of the item produced over the cost of testing, if any, shall not be recognized in profit and loss account but deducted from the directly attributable costs considered as a part of the cost of an item of property, plant, equipment. Okay, now this was the change, and you'll be surprised that this change now these changes were brought in by International Accounting Standard Board. International Accounting Standard Board. Now, I'll explain you what was the situation earlier and what's the situation now. Now, when I say earlier, that means prior to financial year 22-23. This is the year in which this is made effective, okay, prior to financial year 22-23. Okay, now means post. Now means on and from financial year 23. Earlier, at an international level, what used to happen is that during the trial run, you are buying the raw material, incurring the direct cost, or I would say total cost during the test run. Okay, that was say 2 lakhs. Okay, that was say about 2 lakhs rupees. Just a minute, please. Okay, that was 2 lakhs. Now this 2 lakhs was as under. The cost of acquisition of the raw material, direct costs, etc., was about say 2,50,000. And during the trial, you produce something, and you sold. So you have produced something called the samples, and these samples were sold for a sum of rupees 50,000. So the balance net amount was the 2 lakhs rupees. Okay, this net sale proceeds of the item produced, they clarify that the excess of the net sale produced over the cost of the testing, if any, shall not be recognized in the profit and loss account. Now here, this is the very normal case. So this was deducted, this was added to the added to the cost of the thing. But now, in some cases, the situation was like this, that your cost of raw material is 2,50,000 and you realize something called 3,50,000. So 1 lakh was deducted from the cost of this thing. So this will, I would say, was deducted from the cost of the property, plant, equipment. During the trial run, you acquired material of 2,50,000 and you sold the sample for 3,50,000, resulting into the net gain of 1 lakh. This was supposed to be have been deduced from the cost of equipment. But now they say at international level, they say for the accounting period beginning on or after 1st of April 22, they say you should not reduce from the property, plant, equipment, but rather you should recognize the revenue of 3,50,000. You should recognize the revenue of 3,50,000, and at the same time you should recognize the direct cost of 2,50,000 in your profit and loss account. This is what is expected at international level. Correct. So this was the situation prior to that. Okay, this was the reduced from the cost of the equipment. Just a minute, please. But not anymore now. Not anymore now. That means from financial year 21, 22, 23, or internationally financial year beginning after 1st January 22, you were not supposed to deduct this from the cost of equipment, but rather show it in the profit and loss account. This is the situation at international level under IS 16, and this is under in the AS 16. In day 16 say, don't change with this thing, don't change this thing, you continue to have the same accounting policy as you adopted earlier. Meaning, if you have decided, if there is a cost of excess of the revenue over the cost of test done, you continue to deduct from the cost of property plant equipment and do not credit to the profit and loss account. The point is, any changes which are going to take place in future, you should make a note of this, whether you are adopting this or not. However, India is concerned, India has banned this. India has not adopted this change. There is a carve out as regard international companies concerned. But by any chance you are preparing, by any chance, suppose you see, by acquiring the knowledge of IFRS, you have become a global accountant, you have become the global accountant, and you are preparing accounts for some KPOs. You're preparing account. You're working in a KPO and you're preparing account for international companies. So at that point of time, you should remember, okay, look, there are changes in the accounting treatment, especially with regard to the revenue, losses, gain, etc. during the test term. And as per international standards are concerned, if you are preparing accounts for the foreign entity which is following the IFRS, you should not reduce this from the property plant equipment, but rather you should credit it in the income statement. So internationally, if you have an accounts, the accounting treatment would be recognize the revenue of 3,50,000, recognize the expense of 2,50,000. Effectively, you have recognized the revenue of 1 lakh and not reduced from the cost of property, plant, equipment. In India, when you are doing so, your treatment should be like this. You will not present like this. So this will be 0, and this will be again 0, whereas this you will reduce from your cost of property, plant, equipment. Okay, fine. And so this is where the knowledge of this thing is important, right, sir? Now when it comes to the provisions, contingent liabilities, and all kind of thing, the cost of fulfilling a contract comprises that relates directly to the that relates directly to the contract. That means a contract cost attributable to a contract, directly attributable cost. Now the cost that relates directly to the contract can either be incremental cost of fulfilling that contract, example maybe direct labor this, or an allocation of the other cost that relates directly to the fulfilling the contract. Okay, now the effective maybe or example maybe allocation of the depreciation charges, just any amortization charges with property, plant, equipment, this effective from the date of this thing. Now they say that earlier we were not recognizing this as a part of your provisions and a contingent liability, but now you need to recognize the directly attributable cost, which could be a part of your construction cost in all this. So this big change. Now this is again, this is not a carve out, this is a carve out. Internationally, they are not reducing from the property, plant, equipment, but they are charging the gain to the income statement. Correct? In India, we are not allowing that. We continue the same treatment. Any excess gain will be reduced from the property, plant, equipment, and not from the not will not be credited to the income statement. But if you are doing the accounts of the foreign company, be careful about that and see that you should not reduce from the property, plant, equipment cost, but you should recognize in the revenue. These changes are there. Another big time changes are there which we have witnessed is in the format of the balance sheet and the statement of profit and loss, and more so the changes in the disclosure requirement. Friends, as far as we Indians are concerned, those who are following the Indies, they are supposed to follow not just the indies but also the formats, the guidance given under the Companies Act, and more so about the format of the changes. And we've seen that there are many changes in the format of the disclosures. Just allow me a minute. The big time changes are whatever was required. I think there are about 10 items. 10 items which were earlier required to be reported by the auditor in something called Caro report. Companies auditors regulation rules order regulator order 2020. We know the Caro 2016 and Caro 2020. Caro 22 has brought up paradigm changes in the disclosure requirement. So now you may say, sir, where is the connection of Caro 2020 and Indays? But there is a connection in the Indays, and that is by virtue of the changes in the format of the division 2 to the Schedule 3 of the Companies Act. In fact, they have done the changes in Division 3 also, which is applicable to the NBFCs. So, friends, the items which were required hitherto in Caro only are also required in the Division 2 also. There are 10 items wherein the requirements of Caro have been reproduced verbatim in the Division 2 and 3 of Schedule 3 to the Companies Act. And chief among them are about the property plan equipment, about the usage of the loan, about the aging analysis of the debtors, trade receivables and trade payables, and very important among them, additional regulatory information. Additional regulatory information, and by virtue of those information, you have to also mention that whether the quarterly statements submitted to the bank are in sync with the records maintained by the company, then whether the title deeds of the entities are properties of the title deeds of the properties are in the name of the company, then whether the company is declared as a willful defaulter. In Caro, there was a provision about the usage of the funds and all this, so they had brought in these changes even in the schedule Division 1, Division 2, Schedule 3 to the Companies Act. And I'm sure my CA fraternity who are attending this must be aware of this fact. And while we are signing this balance sheet and all this, that they are actually referring to, they should have taken care of this. Uh, in a way, it's a good thing that now the owners which was there under Caro 2020, which was predominantly the owners of the auditors, has now been shifted partially to the management also, because subsection 40 of section 2 of the Companies Act defines financial statements as a the balance sheet, b the statement of profit and loss including other comprehensive income, statement of cash flows, statement of changes in equity, and disclosures and notes to accounts. They call it notes to accounts. So in a way, now this burden will be shared uh, by and between the with the management and the auditors also, because for things which we were reluctant to ask the question, now is the onus of this, and many important, including the accounting ratios, which was they've given about 11 ratios, and you need to comment, and you need to comment where the changes are more than 25% as compared to immediate preceding years. But one thing, friends, I must tell you that normally uh, one thing you must also be very careful about the changes which are being taken place, because gone are the days when the changes were taking place maybe over a period of 5 years time, 10 years time and so. But now you have to be very careful about it, and for that, my dear friends, I always advise you to visit the site of ICAI whenever they are making changes, and also the rules in the brought in by the Ministry of Corporate Affairs. You should be keeping yourself abreast of the changes made by them. And I'll share with those chairman sir or the secretary sir that which items are common in the Caro and in the division 2 also. If you allow me to share, I'll just freeze my screen and go back to that particular slide or the item. Just 1 minute, please. So can you see something on your screen, sir? Excel sheet.
Yes, sir.
Now these are the clauses of the Caro, that is subclause D of clause 1 of rule 3. Now this is there referred to in the schedule 3 to the Companies Act and many other schedule. So this are covered in schedule 1, schedule 3 and schedule 3. So as far as division schedule 3 is concerned, it is called 3 divisions: division 1, division 2 and division 3. Now we have given here that which this is page 2 of the division 1, this is page 2 page 18 of division 2, and this is page 33 of the notification. These are the page numbers of the notifications wherein these items are covered in the schedule 3, relevant for division 1, division 2 and division 3, and then the additional regulatory informations are also given. So can you see that this item are not just confined to Caro, but now they have taken the shape of changes uh, in the disclosure of the financial statements, sir, and which except division 1, the division 2 and division 3 are covered by the index by the index. So that means you should be very careful about that. Now the one call you should be taking care that you're disclosing something in the financial statements by way of notes, like by way of notes concerning the property, plant, equipment, by way of notes concerning the borrowing from the banks and the financial institution. Now, this was predominantly earlier the regime of the Caro. Caro is again a part of the auditor's report. And this was not required to be disclosed, discussed, deliberated in the notes to accounts, but now they are. So make sure that what you comment here should be in sync with what you comment in your Caro report. In your Caro report, you may say the entity has not revalued the property, plant, and equipment, but by any chance if the company has made the revaluation of property, plant, equipment, you will be you will be contradicting your auditor's report and the financial statements, because normally, sir, we have seen that people always say do it as per the last year's copy, just copy it from the last year. And we have seen that in case of one company, I came across this news in today morning in the WhatsApp, that one company has copied something from other company's report, and they say we are pleased to inform that there was a demise. There was a we are pleased to inform about the death of the one of the directors, and this report has gone and signed by the company secretary, and this report has gone to the SEBI, and it has been viral, sir. So these are the hazards of the copying certain without application of the mind, and so I don't think we all can go to that extent, but make sure that your disclosures in the division 2, division 3 of the balance sheet matches with what you have commented in the carbon report. But because normally we see for ideally the responsibility of the it's a responsibility of the management to see that what the disclosure are the responsibilities of the management, but in practice they take the help of the auditors, and we uh, as a good gesture help them, but make sure that you don't end up making mistakes here and there. So the point, the big paradigm change brought in by the MCA, which is applicable for financial year 21-22, are this items of Erst Caro are brought in the regime of the brought in the disclosure requirement of the division 2, division 3 of the company of the schedule 3. So Namaskar ji, Revati ji, Namaskar ji.
How are you?
I'm doing fine. Sir, Rajni जी आप हमारे IBC के प्रोफेसर थे क्या, फैकल्टी?
IBC के फैकल्टी थे और I also attended that valuation course, sir. आपके साथ I'm a
अच्छा।
classmate as well as you took some sessions for us on the account standards also then, Ind AS and all that.
Yeah, Indians, yes, I'm sure about it.
Yes, yes,
So nice meeting you guys, nice catching up you. So
yes.
on a teacher's day, you are my teacher and I'm your teacher both.
So happy Teachers Day to you, sir. We are celebrating it here in SIRC also now.
That is good. That is good.
Yeah.
So with this, I put an end to my session, sir, and the SIRC officials. Thank you so much for giving me an opportunity on this day. And as you all know, it was a matter of commitment. So despite whatever happened in my personal life, I made sure to attend it today, sir.
Thank you very much, CA Yagnesh ji. Like, in spite of your personal loss and difficulties, you have, kept up to your commitment, and that is what an outstanding teacher is always about. And you're standing there right on top as a role model to all of us. So, absolutely wonderful.
My family member, my extended family members, like my aunties, aunt, relatives, they say, "No, Yagnesh, show must go on, and you do what you committed." That's the real tribute to your mother.
Yes, absolutely. So your ultimate teacher, your mother, must be so proud of you today. And we are also very, very proud, sir, to know you and now to learn from you. It's really wonderful. Thank you so much. I don't think any words can express the gratitude of all of us here, the participants and all of us here at SIRC, for your generosity and, in setting aside your sorrow and sharing your knowledge with us. Thank you so much. A great pleasure to hear from you always, sir.
Thank you.
Thank you.
It was nice listening to you as well.
Thank you.
On IBC, you were deliberating like anything, and I learned a lot from you as well. So
Yeah.
happy Teachers Day to you also, my teacher.
Thank you, sir. Thank you very, very much.
I'll take leave.
Thank you, sir. Thank you.
Sir, can we start our session? Sir, are you audible, sir?
Nishith, sir?
Hello, am I audible?
Yes, you're audible.
Yeah. Nishith ji, can you switch on your video?
Since you joined from two different devices, can you?
Nishith ji, you've joined from two devices?
Am I audible?
Yeah, you're audible, sir.
Video is not visible.
That's what I'm trying to fix up. Just
You have logged in from two devices?
yes, madam. Actually, there is a jugaad happening over here.
Okay.
Because there is an electricity outrage at my location.
Okay. Yeah, we can see you now.
But the problem is I'm not able to switch over from the Just one second. Okay. I hope I'm audible.
Yes, sir, you're audible, but the video is.
Your video.
Video should be coming in because I'm currently not in the country, and the location I am, there is an electricity outage which happened just half an hour, 1 hour back, and the entire country is in blackout here.
Oh, okay.
So I was just conserving my laptop battery.
Yeah. So I think then we will start off right away, sir. The fact is we are able to hear you very well, and I think sharing is going to happen only through that. So I'll go ahead with your introduction for the session. So it's very apt that on Teachers' Day, we have one more selfless person who, in spite of all his difficulties in accessing data and being stuck somewhere outside the country, he's come online to share his knowledge with us on big data. We are all indeed very fortunate to have you here with us today, sir. I would like to introduce CA Nishith Seth to all the participants. He is a strategic professional and an experienced consultant with rich and diverse cross-cultural experience of over 2 decades in delivering strategic, analytical, and digital transformation for the clients from diverse industries, including Big Four, government, utilities, insurance, telecom, banking, and financial institutions. He's got a very enviable profile. I'm just reading some highlights out of it. He has got experience in the areas of government digital transformation, telecom data analytics, IT security, business analytics, artificial intelligence, fraud and risk analytics for private and public sector companies and banks. And he is a director at SSPL Middle East Bahrain and was earlier associated with Battleco Kingdom of Bahrain as a forensic audit manager, and also with Substratal Solutions Private Limited, New Delhi, and was a managing partner in SK Seth & Co Chartered Accountants. Academically, he is an information systems auditor and a CA qualified from ICAI. Apart from his academic qualifications, he is a certified advanced analyticals professional and master trainer on data analytics. And he has the proven achievements in driving fraud management and digital transformation, IT security audits, etc. And he has been involved with the Planning Commission of India, Government of United Kingdom for fraud management and digital transformation and training of its employees, has developed RPA for Arabic chatbot and automated document processing. And he's developed tailored solutions for prestigious clients of Battleco, Ahli United Bank, ICICI Bank, and various other banks in other industries, both in India and abroad. He has worked on projects in collaboration with the Ministry of Home Affairs, Government of India, for using advanced analytics and saved USD 15 million in the Freedom Fighter Pension Fund and generated a list of fraudulent pension accounts. And he has performed the systems performance review for Planning Commission, Government of India, and generated a report on the system optimization plan. And he was convener of the Forensic Committee of India and represented India in the JTC 27 committee as a voting member. He's worked in the UN Fraud Management Department, and he's also written 3 books on the subject of e-auditing of banking and fraud detection, published by ICAI. And he's also very symbolically handled teaching assignments as a faculty member of ICAI for the IT audit course in Desai and FAFD course. So thank you very much, sir, for actually accepting our invite and coming forward to share your knowledge on this Teachers' Day. We are very, very fortunate to have you here. Over to you, sir.
Thank you, CA Revati, and very good evening to all of you. And pardon me for this profile. Actually, the chapter your SIRC asked me, so I just gave it, but I don't know.
No. I should give my apologies for not reading out all your accomplishments. There is a huge list of accomplishments, and since sir is sitting in a place where there is outage, I didn't want to take up too much of time. We'll share the accomplishments with you. We need to know your accomplishments, sir.
No, madam, thank you very much for, I'm humbled by it. So I'm actually going to run this presentation within IT. I always say, like, when even in my days of Indian Army, that IT works with Jugaad. And Jugaad only works in India, it doesn't work in US or anywhere. Even China does not know Jugaad. And the Jugaad is like, I'm running 2 devices. If by chance my laptop congs off, don't worry, just give me less than 30 seconds. I will switch over from my mobile phone. Okay, guys, so I'm not going to be on too much of PPT and things. I try to share my certain success, I would say, certain experiences on it. And while listening to CA Desai prior to this, I remember when he said people do copy certain report and paste it in Karos and things. It not only happens in audit report, it happens in IT also. I had a client, I don't want to name it, where one of the big four were doing their SAP consulting long time back, would have been almost 10 years back. And they were supposed to review the entire company's business system and recommend what kind of an SAP should be done and what should be the rules and implementation approach and things. And they printed a huge book for them for almost close to 250 plus pages. And in the first page of forward note and all that, it was mentioned about some other client. So I remember while sitting with the CFO, another fellow member of our fraternity, he told the partner of the Big Four and said, boss, you did a good thing for us. You did a study for last 4 months, but at least first page pe naam to badal dete. So that cut copy paste happens everywhere in every industry, and IT has also been a part of it. So coming to the subject given to me this evening, gentlemen, on big data analytics and things, I think there have been some kind of misconception about what we chartered accountants can really do something into analytics and IT. I remember way back 1996 when I was, I did my CA course. I qualified in the May 96 batch. My father is also a CA. So I was basically a CA by mistake. So in that process, I used to believe that as a chartered accountant, the biggest power or understanding that you have, which is primarily required for any kind of today technology kind of work, is understanding the business. We are the guys who understand accounts, auditing, laws which are applicable to us, and we understand what would be the possible impact of certain adversities or exceptions happening in the business. This experience that we carry, this knowledge we carry, is not with the IT industry. I give you one of my small interaction. I was doing the central audit for one of the nationalized bank. And the senior partner of the firm was very proactive, is a very, very proactive person. And he said, we will pick up IT and do the analytics, which would be something out of the box. And the bank was really surprised, a statutory auditor coming at a head office and asking for the core banking data. So while doing that, I remember I was interacting with one of the renowned IT company, and they said, what are you going to do with the data? You tell us, we will give you. I said, no, my independence is you give me the data, I will perform whatever I want to perform. I don't want your reports. And then they started arguing. At the nutshell of it, we just posted out them and said, if you understand business so well, just answer basic questions about it. And I did nothing, but I just put in forward P&L and balance sheet to the great senior person of that IT company, a very renowned company. And he at the end of it said, okay, boss, I will give you data. Because we understand what does accounting means. And that is where the IT people are not. And that is what creates an edge for us. You know what is the biggest problem of the world today is, including India, we started a journey called computerization. There is a difference between what is meant by computerization and automation. If you remember 1984, when the banking system of the country was the first one to start with the implementing computers, and they were like branch level small desktop machines, which automated first of all your passbook. So you started getting printed passbooks. So there were small printers where they will insert your passbooks and it will get printed and come out, and we all were very happy. Instead of handwritten, now it is printed. We started a journey of computerizing. Means whatever we are doing manually, now instead of doing manually, we are going to do it through the machine. We did not start with automation. What is the difference? The difference is you are replacing your pen and a ledger with an electronic machine. That is computerization. Automation is where you build in an intelligent system which has a brain and can do most of the parts of itself rather than asking you. It knows how to interpret it. It knows how to look for the thing from the basics of it. Now, for an example, at times, I don't file my ITR. So my cousin, my sister is there. She does that. She's also a CA. Or my younger brother, who is genuinely a CA. They do all those things. And I at times wonder, I said, boss, I have my master created in the government of India. I have my Aadhaar card, PAN details. Why are you typing all those details again and again? Now you see what is the problem here. You go to Aadhaar, you furnish all your relevant documents. You go to PAN, you do the same documents. You go to any authority, whether it is driving license, buying a car, registration, bank account, you are repeatedly doing it. What could have been a more economical manner? And what is a disaster here? Today, your one data is being accumulated at multiple locations, multiple times. Imagine how many times is your same file being uploaded at multiple places, requiring that much of storage, servers, processing. How many resources have gone? Rather than having a centralized repository at a national level, where once it is done, automatically all the relevant accounts should be done. Why I have to go and do it all that? This is the difference of computerization and automation. And now when it comes to our CA profession, what are we? We are accountants and auditors. We understand business. I think that is the area where we need to focus, where we do the IT also. I'm amazed, like I'm happy I did my DISA course. I was teaching DISA and it's nice to be back with SIRC. Long time back, I used to come to your Chennai city for training classes and lectures. I used to feel good because in my childhood, I used to do computer assembling. I used to do programming. And when I was studying CA, I was asked to write a program in a basic language for finding mean, median, mode, standard deviations. And I wonder after almost 28 years of my career now, what am I doing learning that and getting a chartered accountant certificate? I'm thankful to that course because I became CA. So do we have that relevance? That is an important part. I remember I was arguing with certain people and they said, no, we should know networking, we should know security, we should know everything. Because we have auditing standards and I don't remember exactly the number. And way back when I was a student, I remember it must be number 3. I don't know the new numbering now. It used to have a topic called taking an advice from the expert. So when you go to audit something outside your domain, you can always seek an advice of an expert and do it. Why can't I do it in IT? Are you teaching me medicines? Are you teaching me engineering before I go to do audit of Engineers India or I do an audit of an hospital? I can take a better advice and do a better thing. As an auditor, as an accountant, I understand data. I understand numbers. And that is where I need to focus about it. While we do that part, a very important act which you should be taking care, whether you do your bank audits or you do your statutory, tax audit, whatever place. Please refer to an important act called Information Technology Act of India. IT Act of India has certain critical sections which has a serious impact on us. IT Act of India basically goes ahead and amends Evidence Act of India. Section 45, Section 54. What does it do? It says what kind of evidence will be acceptable in the court of law in the case of electronic disputes where electronic data is involved. We are doing auditing. You might be detecting frauds. You might be detecting some misappropriation. Tomorrow you have to establish. Under law, the Evidence Act of India comes into the play. It is only under that act your evidence would be either accepted or rejected in the court of law in any disputes. So when I go and analyze the data, I pick up an electronic data, I find some kind of a fraud. I will share some case studies on that. Is my output, is my evidence acceptable? If you just go back into your era of manual auditing, manual accounting, we used to carry those red, blue, green pens in our pocket and used to put initial ticking, doing reconciliation with those, cap-like kind of marks. And we were checking original invoices. We were putting initials on those invoices. Was basically you are authenticating. As an auditor, we never accepted photocopy invoices or expenses bills or anything because we wanted original, no photocopies. Was because you have to establish the authenticity of that evidence that you are auditing. And if tomorrow there is a fraud, that particular evidence becomes important. Similarly, what does the Information Technology Act says? It says any electronic data that you are analyzing, processing, maintaining as a backup, as a printout, or do anything, mandatorily should carry digital signature. You file your ITR, it asks for your digital signature. You go to ROC and do anything online, it asks your digital signature of the directors. It doesn't allow anything without a digital signature. Why? Because that digital signature establishes your identity, and then it is being marked on that particular ITRs or your documents with the Government of India. While you go into a bank audit, how many of you go and ask, today we have core banking, all the data servers are centralized. Do you ever ask the banker, can they furnish you a digital certificate implemented on the database of the bank? If you go and ask them, there is a high probability, I don't say 100%, there is a high probability you will get an answer no. They will tell you, we have purchased a digital signature, it is lying with us from Reserve Bank of India, it is valid, it is not expired, but have you implemented whatever data is there on the server? We do not know that, which is required. That is why I say, please refer to Information Technology Act, which is very, very important. While we talk about our businesses and things, analytics is surely a new opportunity. Analytics, people have been doing a lot. I know I have been doing some FAFD classes where I used to interact with our fellow members. And they used to tell us, yes, sir, we do work on Excels and we do have a lot of macros and we do all those things. That is very good. Now the thing comes out, what are the new opportunities for the profession in this? Move out of Excel. I'm not advertising any product here, but there are certain reasons why I say move out of Excel. Number one, your own auditing standard. Kindly pardon me, I'm not well remembering the numbers, but I do remember certain contents. Our own auditing standards and even international auditing standards says the source on which you are doing the audit or analytics, whatever it is, has to be authentic, has to be reliable. If you are able to modify or change your source that you are auditing, that you are analyzing, your audit standards put a question mark on your audit. What can I do in an Excel? I can change the data. I can make 10,000 become 100,000 or even 1,000,000. I can bring down 100 million to 10 rupees. I can add, remove, delete, do anything. That means if a client gives you the data on an Excel or you are processing a data on an Excel, am I able to modify? Yes, I am. I'm sorry, it's a violation of your audit standards. Your auditing should not permit to do that. That means you need to have certain things which does not allow you to modify or change data. While doing analysis, there is one common thing we all are very fond of. Particularly, I see the new generation, they are fantastically IT savvy, highly educated, and their finger works on the Alt key the moment they get the data on the Excel. And at times it comes out, I've seen even within my own team members, if I go and ask them after 2-3 days, so have you analyzed what is the exception? They say, sir, we are still trying to do, but we are yet to get something meaningful. What is a mistake? The mistake is before you do analytics, there are two important things that you should be answering or requiring its input from the customer or your client. The two important questions are what you want to do and why you want to do. That is where I say I am going to do something called process mining. That is my first step. What I want to do, yes, could be your audit plan. I have an audit plan. I want to look into my payments to vendors, collections, provisioning, bad debts, recoveries. I have all those what? That is a background. Okay, this is what I want to do. Why you want to do that? What is your objective? Is it an objective that I want to look into the vendor payment? Because in my company, vendor payments are made online as well as they are issued by check. So there are two dual ways of making the payments. Because of that, I want to analyze the vendor payments to make sure there are no duplicates. Are there reasons where a person can not be present in the company but can log in into your company system and can process? Yes, it is possible. So your objective of why you are doing this is a very critical and the important question which you need to have before you start analysis. Why? Because this answer of the why you are wanting to do it drives your analysis. What is the data that you are going to be requiring? Otherwise, you keep harping into the dark and you just firing it here and there, all the commands and functions, you will not be able to. Because you do not know what is my objective. For that each objective, your data is driven. That is very, very important thing. And while I'm able to do today, I have ample of technologies available. I think Institute is providing you IDEA software. They have ACL, Analyzer, SQL. There are many softwares available which are specialists for doing analytics. While you have those technologies, you are able to pull in the data which is 100% available to you. Please get out of sampling. I have seen people saying, yes, sir, I'm using a particular tool. Can I create a sample and just do a sampling? Why should I get into a sampling? I give you an example. You will be shocked. Today we are talking about 2022. I'm talking about one of our large corporates in 2004. The group internal audit head, a chartered accountant professional. He said, I want to have my audit planning done by the tool. This is another interesting area which I see after 18 years. Now companies are coming back after COVID. Yes, we should use some solution scientifically to analyze and then create our audit plan. That person had a vision. His name is Mr. Swaminathan, and he looks after the Godrej Group. I have a due permission from him to share this citation from him. He said, I have an SAP system and there are multiple subsidiaries within the Godrej. I will pull out the data, analyze it, and then based on how I see the trends, I am going to create my audit plan for next 1 year. He's not going to make his audit team sit and talk to each other and say, yes, sir, I feel here we should look inventory, there we should look sales, here we should look admin, or here we should look ledgers. No, he doesn't want any human intelligence to tell it. He says, I want to have scientific data to tell me what I should do. That is what he started with, something called, planning the audit with certain background and exceptions in his hand, and then thinking, yes, this is what I need to do. And you will be surprised, in that kind of a time of 2004-05, while working with him, he initiated to make a system which would say over the whole year, in which month, in which kind of weather situation or kind of, economic and other places, how does my business behaves, and then which area becomes important, of which part of the world, because it's a global organization. That was, I would say, a right citation. A guy says what I want and why I want, because he said, I don't want to invest 1 month, 3 weeks of my auditors going on site, opening the files, hunting something meaningful, and then either coming back empty-handed or coming with something found. He says, I would know beforehand, if they go to a next place, what are they going to get? What is should be the target to go and do it? And he came out with saying that average time of 12 to 15 days audit was finished in 3 days. And he exactly knew what is going to be the audit finding beforehand. And only thing was go there, verify, collect evidence, come out of it. That is the approach. Imagine a guy initiated in 2004-5. And this is what today we should be doing it if we really want to make out a meaningful use from the technology that we have. Think out of a box. Don't get into that same conventional auditing things. I give you one more example. You must be having a lot of, I know your South India has a lot of multinationals with SAP, Oracles. You got who's who of the corporates and manufacturing plants around you. What we normally do is we have certain compliances. We have to report compliances. We have company law compliances. And if you remember, SOX compliances came back in 2003, section 404. Then we had section 49 in our company act, what's due to certain frauds that you have to give some compliances. You have to be very sure there are no manipulations, no frauds, no misappropriation in the systems. How do we make it sure? So I check into the SODs of the system. People do SAP consulting, they do SAP audits, they do Oracle audits, and they find there are security controls, everything done. Fantastic. In 2005, I've cited this case many times in my speeches. I was working for an American company based out from South India. And they said, we have already been SOX compliant and we have a NASDAQ listing and everything is in place. Now they wanted to test out. And it was already done by one of the big fours. I said, okay, your SOX is done, your SAP is well done. What I did was, I took 3 data tables, simple data tables. I took the HR master. I took up the daily attendance because that time they had RFID cards. I took the web log, which tells me which all laptops, desktops have been logged by the employees. Yes, and the fourth one was I took the VPN data because that time they had a system of work from home. So if somebody's working from home nowadays, as you worked in COVID, you could log in through the VPN. I took the 4 data. Since I have an HR master, I just simply did a relation to all the 4 to find out how many employees are absent, both physically and virtually. They are not supposed to be there. And then I found how many of those absent employees login is working in the SAP system. And then I found a list of some handful employees. I could easily find out which is the IP number of the system on which they have been working. So I would identify them, what are they doing? None of them violated the SODs. So if somebody had a power of ₹1,00,000 or $10,000, $20,000, they never crossed their limits. But it was not the actual employee who was doing the job. It was somebody else using the login ID password and processing it. Believe me, the exception was $183 million for a company that was certified. $183 million worth transactions were done by employees by logins which were not in the system. That is what I say. Please utilize your power of a powerful auditor. Start thinking out of a box. Please understand one thing in IT. I remember my army days when I was in Indian Army, my boss commanding officer, he's no more major. He said, unless and until you hammer your computer, nothing can go wrong. Only thing can go wrong is if your own thinking is not adequate to reach the objective. So work on your thinking. That is where I used to at times, like a small kid, always feeling bad about the father when he pulls him up. Similarly, I used to feel him, but I realized it later what he's trying to teach. So start thinking more, not depending upon the tools or technologies. Start thinking of your own and then seeing how do I do it. Either you will land up doing it in a straight way or you will do some jugaad. Like I'm doing a jugaad today, I have a problem, so I made mobile, laptop, both ready parallel to each other. So at times it happens straight, at times it doesn't happen. That's what you need to see about it. Then another thing, Banking, another very important area that we have been working with. So that was what I talked about, process mining. And now we have something called continuous predictive analytics. So I shared with you one of the case studies of like you can do is something called audit predictive analytics. Now, another thing coming up is continuous auditing. We have been really doing in a banking something called concurrent audits. We are very fond of it. I remember, from my article days and things like CA firms were really, we should have a concurrent audit of as many branches possible. Every month, we articles going over there, taking printouts and doing the same saving accounts, loan accounts, interest calculation, penal charges and all that. Why I keep on doing that? Can I automate, implement, and let the system do that job for me? Yes, this is what is a buzzword of today, is continuous auditing. Always remember when you're doing analytics, every analytics has a life cycle. It is not like today you made something on duplicate payments, or you had open purchase orders, or you had something called goods, received without purchase orders, any of those kind of analytics. And you say, I'm happy, I've done 15, 20 automation. No, it's running. Every analytics has a life cycle. As an auditor, you should look towards the trend in your analytics. And when you find the trends are declining, because once you do the first time, you will have a very high exception. Then you would obviously, as an audit report, as an advisor, you will tell for certain controls. Controls would be effective the moment you see next quarter, the exception goes down. If the exception doesn't go down, that means controls are not working. If it goes higher, means controls are totally useless. So you need to see the trend of it. And the moment you find a particular audit analytics where it has gone down within the bearable limit, it will never become zero. There would be something and very minor. It will not become so materialistic for an auditor. That means now the things are in order. You can think for new pastures now. So look for the new areas to going ahead. So while you have done that effort of putting that control in place, analyzing the data and making sure it is there, the thing that would help you in future to make sure it doesn't go back is continuous monitoring. Automate it, implement, forget it. You remember there used to be an ad for the Hero motorcycle, fill it, shut it, forget it. Similarly, once you have done that job, automate, implement, forget it. Once in a year or after a half year, you can always come back and see, are there any exceptions or triggers that are happening exceptionally higher? I can go there and look into it. Then we have nowadays a lot of opportunities for us is into the GRC, governance risk compliance. So there are again automations happening. Once you have done the second part of it, integrate with the GRC. What should happen is I'm sitting in my T Nagar office. I'm not going to any of the plants. I'm sitting over there and I'm looking into my audit report where all the analytics that I've done is integrated. I can look into the exceptions, work on those things and mature and move on. Please move out of the clerical job of doing the things. Don't get the slave to the technology. Make technology your slave. Let it work for you and then comes out of it. And nowadays in the audit, something is intelligently coming is called artificial intelligence or even RPA. Beware, I have certain opportunities where, my customers are asking me, I want an audit RPA. That means I'm not going to be labor extensive. I'm going to be technology extensive. And it should do that job and should give my required output as and when what I want. I want it on my walk. I am on a mobile phone. I should be able to see all the analytics or all the audits that I've done available to me. So this is what is going to now start 2022. It has already kicked off. You will surely see the heat of it coming up by 2023-24. So I hope somebody speaks up in the International Accounting Conference that is coming up in our institute in November. Now, when we are talking about certain advanced analytics and things, I would also like to talk about, I don't know how many of you would have heard about something called data migrations. There are banks, there are organizations which are now moving to clouds. A lot of data is moving to the clouds. And there are two new opportunities coming up for the profession in that is one is called data migration testing, where they are requiring the auditors or finance people to walk in, analyze what was the data in my old system and what is the data in my new system. And once it happens, they ask you, please do the testing part. This is a new consulting opportunities, and trust me, not much of competitions. I certain amount of very handful CAs who are across like Mumbai and North India somewhere, they get in touch and we have been supporting them for it. Very few people are there, but I'm very sure in your part of the world also there would be a lot of opportunities. This is where the CA plays a vital role. Yes, there are ways available of doing that part. There is another important thing is like people are moving to cloud and they are asking as an auditor, as a business advisor, can you come and evaluate our cloud things and advise us, is it safe or not? A very interesting thing again there. While we are performing all those things, everywhere data becomes the most important part. So if I get onto the cloud, you will ask me, how does the data analytics becomes important for the customer to get a cloud solution or not? Yes, it is important. I am even analyzing my IT security controls using analytics. I would love to analyze and see what are the breaches happening on the cloud using analytics. I would not like to go by the agreements and terms and conditions. And there are certain serious flaws that need to be highlighted, or you need to be careful in case any of your client come to you and ask you to look into their cloud implementations and things. Let me share those insiders with you, might be useful for you. Point number one. Most of the places, whether you have SAP or Oracle, the backend database is 99% is Oracle in the clouds. And they do implement certain Oracle databases and they say, we transfer your data there and now you can access your data. The first kind of an important area that we look as an IT security controls and analyze it. How am I going to access the data? So the company, whether I don't want to name those companies on this platform, they will come out and say, we give you login ID password, and then you can use our applications and log in, and then you can see your data. While I use login ID password, I reach there. One example I shared with you, you can always authenticate whether it's a valid user who's going in or not. Number two, if I get an Oracle database, I have my IT department, they are going to use SQL, which is 99% the most common thing. And with that, they will be doing all those SQL queries and data maintenance activities. Does the cloud has a security system to scan the SQL queries that are written by the user? A very important element. And most of the places where even outside India I was consulting, I found that it was not there. That means if I write an SQL injection hacking logic, I can crack into the server and I can steal the data. It is possible because those cloud servers are not scanning your SQL queries. This is a very important thing. Number two, while you talk about core banking, you talk about internet banking, you talk about anything. I think most of the audience over here would have gone through the DISA, CISA courses also. You would appreciate that when you do any kind of thing, whether from a branch or from the POS or from any place, your data flows from one point to the other point, and that other point is basically the central server of the data of the bank or the organization. What is the authenticity? The data traveling in that network will not be copied, hacked, modified, deleted. You have billions of transactions. How do you really make sure that none have been modified? That is where analytics becomes important. So these two areas which I just shared are my recent experiences of my assignments that I was doing. And I found that, yes, it does make a lot of critical issues when it comes finally to the auditing. What are the things? They are the sample areas that you surely look into when we talk about our analytics. When you are doing certain retail, you could even like in a banking. Okay, beside this checklist, I give you another interesting case study. In a banking, you have two important sectors. You have a retail banking and you have got a corporate banking. And in a corporate banking where you give the corporate loans, there are guarantors, mostly directors or whoever the person is there who is guaranteed it. You might have certain mortgages of certain collaterals while you're given few hundred of crores as a corporate loans. Now you have a retail banking, which is a separate division. It is possible. I might have taken a retail loan for a BMW Mercedes car. And on the other hand, I'm a director of a company which has taken 1,000 crore rupees of a loan from a bank, same bank. I have defaulted in my paying an EMI of 50,000 rupees or 75,000 rupees for my car. And I continue to be a guarantor for my 1,000 crore loans. I did this kind of a thing for one of the banks and I related out and told them, can you see your exposure? You might have collaterals, you might have everything. What is the guarantee the person who is at the back of it will not become a Malia or a Modi for you? Because he's not able to pay his 50,000 bucks for his car and he's a guarantor there. Another thing that happens is, like, even if you have collateral, how many of us really go and verify on 100% collateral verifications? Today you have a freehold properties. I could do a very easy thing of it. I can give my original property papers. Bank would be happy. Yes, we have collateral. We have done all the stamping, everything, and the valuation of the security is very good. I had a case in Delhi where a guy had mortgaged almost 2,000 square yards of his land, taken a bank loan of few crores of rupees. Although he was paying, fortunately, the EMIs on time, there was no default as of now. We just picked up as a luck in that bank audit, we picked up that property and I went over there. What I found that guy has constructed 4 floors of construction over there, made flats and has sold it off. And it's a freehold. And there is also an office of an advocate. Nothing critical to advocate, but you can understand if an advocate is sitting and the property becomes dispute, what could happen? On the ground floor, there was a mechanical garage. There were families. And I came back to a bank and he said, tomorrow, if he does a default, what is the guarantee of this property? And I just did a sample talking to those people and they found like somebody was a second guy, somebody was a fourth guy who had purchased because that was a freehold. The original guy who was there, nobody knows about him. The bank is at a mercy because he's just paying this EMI. If he defaults, it is going to take another generation for the bank to get the possession of the property. Even if you have Securitization Act of bank and things, still we understand what our legal system works in India. So I do not personally say that I'm very happy that I have all these documents in place. I try to start relating them when I have analytics. Okay, how is his individual, if he's doing any retail loans or anything, is he a guy also with my corporate? Is it really non-NPA? Is he a paying guy? Does he have a net worth or not? I could do those kind of checks. I can easily analyze the ledger account of those, what we call HNIs, high individual people, and then we can see whether a net worth is matching to the exposure a bank has to this guy. I could even look to that kind of things. So that's what I say, start thinking out of a box. I repeatedly come to that kind of a thing. And that use out my various places that the way the things can be done. You could also use analytics for certain KPIs, key point indicators, where, I could get certain insight very easily. I could even, automate my certain issues or certain KPIs, as you see, the cost to income, return on average equity, net profit after tax, run rate, average on return on average assets. So there could be, your cash adequacy ratio. There are tons of ratios that RBI subscribe. Even if you pick up those ratios, put onto the data, analyze it, and then start deep diving it, that becomes like threats to you, and you can really go down to a transaction level. And you can reach over there at the bottom and find out what are the reasons why this is not in place. At times, what happens is one of the ways of analyzing these ratios is we have numerator, denominator, divider, and we say, oh yeah, it is above 5, so this is good. If it's above 10, is good. I don't stop over there. That is what you're getting, numerator divided by your denominator and getting a ratios out. Start individually digging to those components. And then looking to the components where the they really go exceptional to the parameters or the healthy numbers should be, and they are not actually a healthy number. So you might find there could be a compensating number. Something has gone down in one of the, if there are like 2 or 3 elements added together as a numerator, one element would have been down, but other would have been such an excess that it would compensate the other one. So overall ratio looks to be healthy. Start digging down to it and then individually analyze it. You will get out certain very important findings into it. There is no end to it. As I said, like it is all up to your mind that what you really want to do, and individually how you can do. This is nothing but I've written what I just said out to you. If you have any question, feel free to ask me. Moreover, I have just been done with what I wanted to share. But only thing I can offer, and as a professional colleague of yours, being in this fraternity, and I have been working into this part, I really emphasize a very important element is called training. We need to have very structured, proper training. This is of exciting. I think I shared my experiences of various new venues. It is possible. It's not difficult to learn. Don't have that fear. You should have a training programs which are focused on your subject matter. How to achieve these kind of things. And in case you find or your SIRC would feel like, I would be always happy to share my certain training programs and would love to do it as a part of your chapter or regional council things. So I'm open for that also. So thank you, Sierra Madam, for giving me this opportunity. And if you have any questions, I'm open to the floor now.
Hi, good evening, sir.
Yes, you're audible.
My name is Shiva, sir. I have a question. Can I proceed?
Yeah, please.
Fine, sir. Thank you very much, sir. It's a nice presentation and more insights about this big data analysis and all. We are the part of this like 26 companies and all, and we have the big data to analyze the things and all. I would like to know more how to dig out more. Is there any tools or something better softwares available? Like we have the 26 entities or licenses. When we are focusing on one, when going to the other one, by the time we come to the other one, we are spending a lot of time and all. Like we have seen, like we have to move out of the manual or something like that. We have to do the automation, something like that. What are the best way? Whether there any tools or softwares? Is there any suggestion?
See, as I said, like I think the C Institute is already helping you with a nice opportunity with your idea tool. There is an analyzer also available. ACL is now getting into its life. It is going off. I think the company got sold off, as I heard in the market. But you do have idea, you have analyzer. Both of them are quite an audit tool available. Now coming to the requirement about the tool, as I said, like before, I could even say whether you should use Excel or you should SQL or anything. Can you more elaborate what kind of analytics you are looking into those companies that you are handling? What is the kind of data and what analytics are you trying to look into it?
We are into the reporting team actually. And we are supporting to the various business segments, audit team, and we have this payroll team, accounts payable team. We are a central team, and they are like all the teams are doing different things and all. Being sitting in the reporting team, we are analyzing how the monthly movements, P&L, balance sheets, all this, and that is the main core area. And we are responsible for identifying any gaps or frauds, anything. Compliance issues. So this is the main area actually.
Okay, gentlemen, let me give you how do I work about it. I've been handling a similar kind of a things. As I said you just in my presentation that whenever it has been, we complete our auditing analytics and we know this has been done. If you want to reuse it out again and again, there is a way where I said like you automate, implement and forget it. So
Yeah.
what you can do is, as you see, I hope my screen is viewable to you.
Yeah.
So what we have done over here is, like, suppose you see something called procure to pay. As you said, you are looking into payables.
We have the same process, P2P.
Yeah. So you have a payables with you. What I have done over here with my experience, you see over here, like this is for SAP. You see here SAP tables. Now, if I click on this over here, I have basically in a simple English, it has nothing to have any technical thing. That's what I say, get out of the fear of technology.
Okay.
In a simple English, what we have done here is, I know when I go to an SAP customer, be prepared 90 to 95%, whether it is HANA, R3, R4, any version, ECC 6, whatever they may say, 95% for the auditor, your SAP is a vanilla. Vanilla means it's not going to have any chocolate strawberry flavor over it.
Okay.
Very 5% customization happens. That customization is within the rules, which fortunately does not fall on the most of the reports I've seen in my career. It is mainly on the operations and filling the forms, and somebody has certain more extra values. That's it. For an auditor, we don't have. What you can do is you can surely, customize it and say, okay, I'm going to look into these are technical names of the SAP tables. What we have done beyond the SAP tables, we have also gone and mapped out the field level information of the SAP tables. So if I have a table called BSAK, which is a technical name for all the cleared item. Cleared item means where my vendor invoices are paid. So that table is called BSAK. If I am going to look into vendor payment, I know I'm going to target this table. And within this table, these are my precise fields. There would be more than 250 to 25 columns in each SAP table. What are my exact required one? I want a document number, I have the ELNR. So all those things are done. So you can do these kind of things, or we can support you in case we don't mind helping our professional brothers and sisters. So, this kind of information helps you, and thereafter you want to use it, you can have these kind of things ready. So you can build these kind of things on any of the platform, whether you are using IDEA or you are using Analyzer, hardly matters. I use Analyzer, so it's okay. I don't know, how do I hide this top one? Then I can show you something. If not, like, okay, let me just make it like this. So like for an example, what I can do over here, I normally I have an option called apps. Within the apps, what we did, we made a audit analytics by the name called Assure BI. And now, like, suppose I have to do procure to pay, within that, then vendor master, then you could have the report. So you can create this kind of an automation. You can give it to your team, tell them, please go plug in, get the data, analyze it, and the reports would be ready.
Yeah.
Yes, this is possible, which you can do it.
Sure.
I hope I'm able to answer you.
Yeah, thank you.
And something surprisingly, if I show you a live small case, you can even do something called trial balance analytics. Have you ever heard about trial balance analytics? I'm running this application which runs on SAP, nothing to sell it off or anything, just did it. I could do a trial balance analytics where I can say I have a month 1, I have a month 2. I can select out which month I want to pick up for comparison. Which year do I want? Do I want to see a variance of 10% or more than 10%? I say, no, I want to see all the accounts where the variance is, say, okay, put an odd number, 38%. Do you want to pick up all the accounting classification? In SAP, you have accounting classification, or you want to select. If I just put a tick mark, I want to select, I click OK. What it does now, it basically runs at the back on the SAP data and opens up a classification for me. So it says, like, I want to compare revenue accounts, I want to compare expenses. This is a standard classification you will find in SAP and Oracles. So you could select what you want. You want assets current account, I can select. And then what I do is I just click OK. Now what is happening is at the back of it, you can just simply refresh your data, run this kind of a trial balance analytics on any of those data, and it will give you an output. And then as an output which comes in an Excel file, you will be able to look into it. So if I go to my command log, it says like, this has been done. So my trial balance procedure got over and the data file has been created and the thing has been completed. So those kind of things, yes, you can do it. No issues.
Thank you, sir. Thank you for the.
And that's what I said. If you would like, I wouldn't mind having a training programs teaching you guys how this to be done, and you can learn it from your institute.
Yeah.
Yeah.
Thank you, sir.
Welcome. Yeah. Any other question?
I will check with the audience. This is from Office of SIRC. Participants, if there is any question, you can post it in chat box or you can unmute and ask the same. If not, so we'll wind up the session.
There's somebody called Naga. Naga, he has written up.
Yeah, he is the one who just
Yes,
posted
sir.
it.
I am the person.
He is the one who just interacted with you regarding the questions. So, seems we are done with the questions. Seems.
One more question to SIRC team, sir. I
Yes,
think
please.
one of the member is there here.
Yes, please, sir.
Is there any training programs is organized by SIRC for the Power BI something?
No, we are planning for the same. So mostly it will be organized by end of September or else in October. So we are yet to plan, and it will be physically done in hands-on session actually.
Hands-on.
Not virtually. Virtually, if there is any, we'll let you know, sir. Surely you can check for SIRC updates.
Yeah, I'm
So
getting
mail,
it. Really, I
yeah.
really appreciate your hard work and efforts and like sitting wherever we can attend the session. At present, I am outside India also, similarly like Seth, sir. And I'm able to
Thank
attend
you.
the sessions.
Thank
And
you,
because of these virtual sessions, I'm able to attend a few sessions.
Sure,
Thank you.
sir. We are planning virtual session, also physical session simultaneously in a month. We'll let you know if there is any. You can see for updates in SIRC.
Sure, sir. Thank you.
Thank you. Nishith, sir, it seems there are no more questions, so we'll wind up the session, sir. On behalf of SIRC, office bearers, chairman, secretary in the absence, we thank you so much for time spent here on knowledge dissemination, sir. In spite of you being outside our country and also having a hardship in connecting network connectivity, you joined us and you have completed the session hard times. Thank you so much for your time spent here, sir.
Thank you for considering me to be a part of this event.
It's a privilege to us, sir, institute, and thank you so much for your time spent. Yes.
Thank you.
We look forward to having. Thank you, sir. Right.
Thank you, everybody. Thank you.
you.
Have a nice evening. Thank you. Bye-bye.